this is Raman Gill. Welcome to episode 65 of the 10,000 Trades Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we'll take a look at something slightly different, which will be our bullish pennant. I know we have covered pennant once before, so let's take a look at what a bullish pennant looks like, how the price coils within a bullish pennant, and where the price breaks out of this to give us a really good trade. We'll look at where to enter the trade, where to position our stop loss, and where do we exit the trade with a profit.
Here we are looking at a bullish pennant. This here is an example of a bullish pennant. Bullish pennant is formed when price moves up and then holds up towards the high. And here we can see price has gone up here and is just holding the highs. It hasn't come down yet, even though we see these pin bars here, and it is our important support and resistance area here. However, price is just holding, and if you take a look at it, it is starting to push a little bit higher. So it is just holding above, and it's giving a little bit of an indication that it's going to move up higher. So this is a bullish setup. So we normally have a move up high, then we get price consolidating at the highs, and generally that means that we are going to see another push higher. So this is another example of a bullish pennant. Price broke out of this consolidation and then consolidated at the highs once again, did not come down, and that gives us an indication that we're likely to see another leg higher, which we get here. So how do we trade these now? So the first example of trading these would be just getting into the move at the beginning. So in this case, we had price coming down and then we see a reversal signal. So we have a bullish pin bar right here, and then we get another confirmation candle here. Once you get the confirmation candle and we see the price has rejected a level at this point, it's here a 106.20 level here, and it's also our support level. Once the price rejects that level, we can enter the trade. Now this is a bullish signal and shows us that the price is likely to go higher. So we can enter the trade here. Our stop loss goes below the low here, and then we stay in the trade. Once price moves up nicely here, then price starts to hold up at the high. So at this point, it doesn't look like it's coming down. It's actually starting to just holding its place and starting to even look like it's moving up higher. So this is our bullish pennant. We wait for the bullish pennant. Once we recognize the pennant, we just wait it out because we're looking for next leg to the upside. And as we can see, we get next leg to the upside, and then we get another bullish pennant, and we get another move to the upside. So now we have had 3 pushes in the same direction. That's usually an indication that price may now either consolidate or it may even reverse. So this would be a good time to get out of the trade. Now we are starting to see sideways consolidation again. So this is a good time to exit the trade. So in this case, from entry to exit here, we have 144 pips in the trade, which is about $1,440 if trading one standard lot. Now there's another way to trade this. So for example, if you did not catch this move from the beginning, what could you do? So another way to trade this is look for price to break out of the bullish pennant. Because it is a bullish pennant, the price is holding the high, we're expecting it to continue higher. So in this case, we would wait for a break outside the pennant like this one, look for 50% pullback, and we can enter the trade here. In this case, we would enter the trade on 50% pullback right here. Our stop could go either below the pennant, making sure we give it some room here, or it can go all the way to the bottom. So the one all the way to the bottom, this is a safer trade, and this one would be a little more aggressive stop loss here. But either one, it's your choice. But normally we are expecting a move that will be at least this much in height. So here we're looking for another move another leg which would be about the same length here. So we would enter the trade right about here, and then we're looking to do 1-to-1 risk to reward here, and our stop will be somewhere around, sorry, our take profit will be somewhere around here. So once the price gets to this level, we can just exit the trade. So those are two different ways we can trade this bullish pennant here. One is to stay in the trade once we see the bullish pennant and look for that second and the third leg higher, or we can get into the trade once we do see a bullish pennant and look for that second leg to the upside.
I do have a special announcement to make. I'm launching a new course called Demystifying Forex Fundamentals. One of the things that I've noticed is a lot of retail traders, we don't understand the fundamentals too well. I know most people look at the Forex Factory news. However, most people I find do not have a good understanding of what the news means and how the news drives the market. Over the years, I have picked up a lot of concepts through different courses I've taken and also through my MBA. So I feel like this is something that's missing in the market at this point. And to rectify that situation, I am launching the course called Demystifying Forex Fundamentals. And in this course, I will be going over not just the COT that I normally talk about in my weekly analysis, but I would also be talking about how to gauge market sentiment. I will be looking at how to understand the news reports that come out. What does CPI mean? What's GDP? And how does that impact the markets? How do the interest rate decisions impact the market? We'll also be looking at leading indicators and what these indicators are and how we can use them to make better trades. We'll look at intermarket correlations as well as currency correlations. We'll take a look at how to use equities to trade Forex as well as options data to take better trades in Forex. We'll take a look at US dollar index, as well as we'll take a look at different country profiles and also looking at what impacts their currencies. And we'll also take a look at carry trades. So the price for this course will be $397. The course starts on April 1st, 2017. However, I am doing a pre-launch right now. And if you'd like to register for this course at this moment, the price is at $250, which it will go up in a week. For more information about the course, please visit tradingwithvenus.com/fundamentals. Thank you for joining me today. If you like this episode, please like, comment, and subscribe below. It's been a pleasure sharing this trade with you. I will be back in the next episode with another great trade setup.